Hello, and welcome back to Complex to Clarity. If you're new here, we specialize in making complex concepts easy to understand in 5 minutes or less. Today's topic being short selling. So, what is short selling? Simply put, it's when someone borrows a security, like a stock, and sells it. Why? They believe the price will drop in the future. If they're right, they can buy it back for less, return the borrowed stock, and pocket the difference. Let's illustrate this with an easy example. Imagine that a trader thinks the price of a certain stock, let's say Company X, is going to decrease. Currently, Company X is trading at $100 per share. The trader borrows one share and sells it immediately, receiving $100. Now, let's suppose the price of Company X's stock does indeed fall, dropping to $50 per share. The trader decides it's time to close their short position, so they buy back one share of Company X for $50 and return it to the brokerage they borrowed from initially. Since the trader originally sold the shares for $100 and now bought it back for $50, their profit is $50, minus any fees or interest paid to the brokerage. Think of it like selling a borrowed watch for $100 and then buying it back when its price drops to $50. You return the same watch you borrowed, but you made a $50 profit. But remember, short selling comes with considerable risk. If the price of the stock increases instead of falling, the trader can face significant losses. In our example, if the stock price of Company X rose to $150, the trader would need to spend $150 to buy back the share, resulting in a net loss of $50. However, if they've predicted correctly and the price falls, they stand to profit. Let's look at a real-world example. Remember the GameStop frenzy? That was a classic case of short selling, or in this case, a short squeeze. Many traders had shorted the stock, but when its price started to skyrocket instead of falling, they were squeezed into buying the stock back at much higher prices to minimize their losses. So there you have it. Short selling in a nutshell, with an easy-to-understand example. It's an interesting strategy, isn't it? But as we've seen, it can be a high-risk, high-reward game. As always, it's crucial to understand these concepts fully before you jump in. Remember, the goal of investing should always be to make informed decisions. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe for more educational content. See you in the next video.